From the Cube studios in Palo Alto and Boston, bringing you data-driven insights from the Cube and ETR. This is Breaking Analysis with Dave Vellante.
Geopolitical dislocations are ripping through the stock market and are filtering down to IT budgets in the form of increased uncertainty. It seems that every quarter of budget optimism is followed with some external event that causes organizations to tighten their belts. Specifically, we've seen the increased momentum in January CIO sentiment on spending pull back as war, oil prices, and the threat of inflation, and even the prospect of Fed tightening now loom larger. While big tech players continue to spend massively on CAPEX, and the genuine enthusiasm from this month's Nvidia GTC and RSAC events is still being felt, mainstream enterprises are once again expressing caution in their spending intentions. In addition to economic and world affairs, AI success still eludes most mainstream organizations at scale. Our observation is that the tech industry is in the third inning of the AI wave, which really started in earnest earlier mid-last decade with DeepMind and other significant research milestones that led to the ChatGPT moment and subsequent moments like Claude Code and OpenClaw. Yet organizations are still in the first inning. The data suggests that while virtually all firms are leaning into AI, those realizing ROI at scale remain the minority, while leading thinkers like Jensen advise not focusing on ROI and letting innovation flourish, irrespective of hard dollar returns. The reality is, in the land of enterprise customers, tangible returns and risk management remain key governors of spending momentum. Hello and welcome to this week's theCUBE Research Insights powered by ETR. In this breaking analysis, we share new survey data from ETR that quantifies macro spending and AI adoption within the enterprise, and we put forth our thesis as to why the gap exists between AI enthusiasm and enterprise adoption and ultimately spending. All right, let's bring up the first slide here, which is one we've showed you many times. This is ETR's latest quarterly drill down survey, which measures macro spending, IT spending, going back all the way into the COVID days, where you can see that blue line on the left, 7.3%. We exited COVID with a whopping 7.3 to 7.5% expectation. And as the 2-year interest rate rose, the IT spending expectations dropped. And you can see that in 2022 was a tough year, and it bottomed at 2.9%. And then the Fed started to lower rates. And you can see these peaks and uncertainties. It pops up 4.3%, you get, but back up to 5.3%, then, you get the tariff scare and it drops back down. Earlier this year, we saw, 4 and then 4.6%. We exited December of last year at 4%, and January went up to 4.6%. We're now back to 3.6%. So, what this is showing is that the economic uncertainties, the uncertainties of geopolitical tensions, seem to have at least a correlation with IT spending. Is it causation? Well, my observation is over many, many years of watching this is the economic impacts are felt in IT spending. All right, let's bring up the next slide and get into sort of AI a little bit, because this question that ETR has posed now for the last several quarters: how is your organization currently leveraging AI to address talent shortages, enhance productivity, or drive business model innovation in today's economic climate? You can see we go back to July 2025. It's no surprise that the number one citation is enhancing workforce productivity through automation or task augmentation. You can see that sort of peaked at 73% over the last several quarters. I mean, how much more can you squeeze productivity out of the organization? And we're seeing AI having an effect on that. We'll talk in the next slide a little bit more about that. But if you go all the way to the right, we highlighted that red box. We are not currently leveraging AI in any of these areas. That doesn't mean they're not using AI, but anyway, that number is down from 10% last July down to 6% now. So you're talking low single digits. I mean, essentially everybody is deploying some type of AI, whether they know it or not. The explicit question is, okay, what are you getting out of it? So back to sort of back to the left side, the second set of bars here supporting employee decision-making with AI-driven analytics and insights. This one has seen steady increase over the last several quarters, and it speaks to the job that firms like Snowflake and Databricks are doing, because they've done a really good job with consolidating analytics, and others too. You would put Oracle in that category. IBM is obviously a player there, but Snowflake and Databricks are really the sort of poster children for the modern data stack. And when you have data that's so well organized, you can bring AI to that data, and you're seeing firms supercharge their analytics and insights. So it's an obvious win for customers. You can see transforming our business through new AI-enabled products and services, revenue streams. It's actually interesting to us that it's that high. We'll talk a little bit later about what we see as a new business model that Jensen sort of exposed at GTC last week. And then headcount, there's all this talk about AI impacting jobs. You can see it's unquestionably affecting future growth in headcount, but you're not seeing, dramatic reduction in headcount as a direct result of AI. There was an article, I believe it was in the Wall Street Journal this week, that talked about how organizations or companies would conveniently, cut, maybe because they overspent during COVID, think Amazon, or maybe, they're just having some financial issues and they want to cut. But then, of course, they make it sound like it's AI. They try to turn it into a feature, not a bug. Nonetheless, that's the situation right now. Is AI is being deployed. It's being experimented with in a lot of different ways. But let's go to the next chart, and you can see what kind of returns people are getting. Thinking about your organization's AI initiatives to date, how would you describe the ROI outcomes your organization has seen for each approach? You can see ETR's data here is 1,573 responses. On the left-hand side, they broke it down in two ways: building in-house solutions and buying external vendor solutions. And you can see the no traction, continues to decline, but there's still, significant numbers there. Particularly on the left side, embedded AI seems to be doing better in that regard. But then you go back to the left, adoption, ROI not yet realized, that second set of columns on the left-hand side of building in-house solutions. And you can see that's kind of, hanging in there around 30%. ROI in pilots, limited use cases, but not yet scaled. That is the big one, right? It's 33% on the left side, and it's 39% in the right side. And you can see that the sustained ROI at scale, it's hovering around 13% in both cases. So it's in the low to mid-teens. What does that tell us? Essentially, that tells us that, the MIT study, while maybe it was a little bit overstated, underscores that observation that we made up front, that the technology industry is screaming ahead. They're in what we call the third inning, from research like diffusion models and transformers, and of course the ChatGPT piece, and going from RAG-based chatbots to then reasoning, and now we're in the Agentic era. The vendor community is moving fast. The ability of the customers to absorb that is definitely somewhat constricted. Why is that? Stuff is new. If you bring up the next slide, this is something that David Floyer developed, and I want to spend some time talking about it and thinking about it with you. It's a new topology that he developed. I've been trying to get him to publish this, come on Breaking Analysis and talk to me about it. He's very busy doing some things with his nonprofit these days, but he and I have talked about this, and we will have him on. But this is a new intelligence topology, and you can see he's got the frontier models at the top, and then this thing he calls the cognitive surface, the transactional substrate, and the edge. And I want to briefly walk through each of these. The frontier model is at the top, and it's the heart of intelligence. It's where intelligence lives. It really is the sole source of tokens, and it performs things like reasoning and planning and synthesis and learning, and it runs on the most advanced hardware that's available. And we'll talk about that in a moment. And the pace of improvement is just astounding. I was talking to Google this week, and they're kind of the mind that aligns with what David Floyer has been saying, that, the frontier models are actually going to become increasingly capable and grab more and more and more of the function. It's very capital intensive and very power dense, and it's sort of scarce by design. There really are only 4 frontier model vendors. Obviously Google, OpenAI, Anthropic, and XAI, and Meta trying to catch up again, and Zuckerberg is doing what he can to do that. But really, 4 top frontier models. And then, small number of organizations can develop and operate those frontier models at scale, and enterprises aren't going to replicate those. The next layer, that green layer, is the cognitive surface. Sometimes George Gilbert and I have called that the system of intelligence. And this is the new high-value real estate that we see emerging in the new software stack. It exists today in places like Palantir, but it's not widely available for horizontal applications. Salesforce is trying to build it in. ServiceNow is trying to build it in. Others, like Oracle, will be there as well, and many others, IBM, et cetera. But this is directly coupled to the frontier model, and it's a new layer that doesn't exist today in traditional enterprise architectures. This cognitive surface layer manages all inputs to and from outputs to that intelligence layer. It shapes the intent, the context, that defines constraints, and is really the semantic grounding before intelligence is actually invoked. So it expresses intelligence into actions, system interactions, and then multimodal outputs after the tokens are produced. So it hosts services like security and policy enforcement and compliance and auditability. It controls latency, balances that and integrates with enterprise systems. So it has to evolve in lockstep with the frontier models, and that takes time. And so while it remains external to the frontier models, it preserves control and adaptability. And so the frontier model developers, they have to participate in the cognitive surface architecturally. They've got to plug into it. And evolutionarily, they will almost certainly connect to and control its distribution through partnerships. Large enterprises are going to operate, we think, instances of that cognitive surface on-prem, locally, or within sovereign environments to make sure that it gets the latency requirements that they need, the security and regulatory requirements, and other edicts of the organization. But this distribution is going to occur, we think, under strict contractual and technical control. Enterprises are not going to be able to modify the cognitive surface itself. They will only be able to configure and utilize and integrate it within defined boundaries, semantic grounding, safety constraints, interface definitions, and the like, under the frontier model governance. And this arrangement is going to preserve control, and it's also going to preserve the IP of those organizations. All right, bring that back up, Alex, if you will. Let's take a look at the transactional substrate. This is very important and something that many people sort of forget about. So it's below the cognitive surface. You've got this transactional substrate, this kind of blue slate layer, and it consists of existing enterprise applications, databases, and ledgers, and systems of record, and they are essential. They no longer, however, serve as a locus of intelligence. Their role is to store the truth, execute transactions, and enforce regulatory and operational guarantees. User interfaces, are kind of secondary to that. I mean, we're going to be speaking to these systems. So decision logic is migrating up the stack here. Okay, think about that. It used to be sort of embedded in these transactional systems. No longer. We think it's going to rise to the top. And then finally at the bottom is the edge. It's sort of in the periphery. It's initially sort of lagging in capability, but we saw a lot of this at Mobile World Congress. John Furrier has written a lot about this. The hyperconverged edge, bringing compute, storage, networking, wireless, fiber in a 1U rack to the edge. Nvidia is going to be playing there, but this is rapidly going to become essential. The edge is where sensing, execution, physical action all occur. And these systems are going to increasingly operate with local autonomy when they're disconnected, and they're going to use centrally managed models and policies. But so the edge is strategically important. Its detailed treatment is going to be, we're going to drill down that in the future. So the point is that AI is catalyzing a new technology and economic model where intelligence is produced by AI factories in the form of tokens. And those tokens are going to be accessed via APIs, and spending is going to shift from traditional general purpose computing to this new model. Jensen calls it accelerated computing. It's more than just parallel computing. We've had parallel computing around for a while. It's accelerated computing that takes advantage of CPUs and GPUs and storage and networks and in a new way that GTC talks about as extreme co-design. Now, all of this is complicated for organizations to just start absorbing overnight. Add to that what Jensen spoke about last week at GTC, and I want to share that with you, Alex, if you bring up the next slide. He talked about this slide. He said to us in the analyst breakout session that this is the most important slide that he showed. I think there were a couple of most important slides, but I'm going to key on this one because it directly relates to the topic of today's breaking analysis around the gap between AI enthusiasm and the reality for enterprises and how that's trickling down into creating somewhat cautious IT budget sentiment. Anyway, this chart shows on the vertical axis throughput, and in the horizontal axis it shows what they call interactivity or responsiveness. Think of it as throughput and latency, but it's more than latency on the horizontal axis. And you can see on the vertical axis they're dividing this the throughput by energy consumption, megawatts. It's very important because you have a limited energy budget, and so you can't just put more energy in. So you are constrained by that budget. And when energy is a constraint, when power is a constraint, we wrote about this in our breaking analysis about Jensen's law. When power is the constraint, moving up these curves that he's showing here is vital because this ties into what we call Jensen's law. Buy more, save more, or buy more, make more. If you're power constrained and the network is underutilized, these things become economically free, if you will. So you can see as we go from Hopper to Blackwell to Rubin, the incremental improvements. Remember, these are 1-year cycles. This is not Moore's law, doubling performance every 18 to 24 months. This is massive improvements every year, and you can see the delta between Blackwell, that sort of forest green line, and the lime green line, which is Vera Rubin NVL72 with LPX now. We'll get to that in a second. 35x improvement. So imagine you've got a limited power budget in your AI factory, and you all of a sudden get a 35x improvement in throughput. So if you're training models, that's huge. That's the business model on the left-hand side in the vertical axis. On the horizontal axis is latency, and you can see how these curves tank as you get to certain levels of interactivity, as shown here. The Grok acquisition, well, it's not really an acquisition, but essentially it is, acquihire, Grok with a Q, by the way. LPX is the integration of Grok into Rubin. And you can see what it does to that line. It extends it out. The point is, Jensen said, every CEO on the planet needs to understand where they fit on this Pareto. Are you training models? Are you CoreWeave or Crusoe or Lambda or Nebius? Giving access to model builders so that they can train models. If you are, you buy more, you will save more or make more because you're monetizing on that vertical axis. The horizontal axis is somewhat new. There's a new business model emerging. What is that business model? Look at the notes here or the text behind Jensen. It says free, medium, high, premium, and ultra. And we're talking about costs, and this is a new revenue model. The free, you get latency's not that great, no big deal, not paying for it. Medium, that might be the $20 a month. High, maybe that's some folks spend $200 a month on token generation. Get into premium and get into ultra, like hardcore coding, you heard Peter, the inventor of OpenClaw, talk about how he kept running out of tokens. He had to buy more. He had multiple screens open. Those are the hardcore users. And then to the right are the ultra hardcore users, where they want really, really low latency, and they can monetize that. So understanding where you are in this curve, are you monetizing on the vertical axis or the horizontal axis, or both, is a new business model. The point is, again, this is a complicated situation for a lot of organizations. Not only do they have to figure out what use cases for AI are going to be delivering the greatest value, not only do they have to build those systems, make sure they work in their sandbox, make sure they're safe, deal with the agentic security, which we talked about all week at RSAC, and then they've got to operationalize them, and then they've got to prove them out, then they have to scale them. Bring in now a new business model, a new revenue model that's based on tokens. Jensen, I've said this many times now, and apologize for being redundant, but Jensen said, if I hire a $300,000 or a $400,000 or $500,000 software engineer, and that individual only spends $5,000 a year on generating tokens, I have a problem with that. I'm going to be really pissed off. Why? Because I'm going to give that individual a really powerful laptop, and I'm going to give that into a computer, right, or a desktop even, and I'm going to give that person a token budget of $250,000 a year and say, go build an army of agents that are supporting you and spend on tokens, drive value. So the point is, token generation is a new monetization angle, that horizontal axis that we showed, because you're going to be taking energy and compute and data into the AI factory, and you're going to be producing intelligence in the form of tokens and tapping into those tokens through APIs. And those APIs could be through LLM vendors. They could even, more likely, they'll be through SaaS vendors, which is maybe why the SaaS apocalypse is off base, and new emerging companies through security companies, and virtually every company in the world is going to be essentially selling intelligence, and they're going to have a token budget, and they're going to be managing that token budget in the same way that's going to be part of their COGS, the same way they had to manage their cloud COGS. They're going to be packaging that into new products and services as software, as George Gilbert would say, and driving new revenue models. So figuring out where you are on Jensen's Pareto curve, and figuring out what the unit economics are of that, are going to be very important. And that's a complicated situation. And as we go from the old world of general purpose computing to the new world of accelerated computing, what you're seeing in the macro numbers from ETR is customers are trying to figure that out. So they don't want to overspend on the old, and they don't want to over-rotate on the new until they figure it out. And to figure it out is what we try to help you do. So thank you for watching. That's it for now. I want to thank Alex Morrison, who's on production, and Ken Schiffman as well, Kristen Knight, Kristen Martin and Cheryl Knight help get the word out on social media. Rob Hof over at siliconangle.com. Check out siliconangle.com. Amazing coverage of 2 weeks ago, or last week at GTC, and this past week at RSAC, covering all the news. Check out etr.ai. Great survey data. Check out their latest survey on the state of security. I publish each week on siliconangle.com and thecuberesearch.com. Check out the Cube Research for all the deep dives. Thanks for watching, everybody. We'll see you next time on Breaking Analysis.